exciting time to be talking with you because I've known you for quite some time, and you may not know, but you did have a huge impact in my journey as a real estate investor along the way. I think I started going to the Durham REI meeting. It might have been 2015 or so. And I remember just being blown away. We were meeting at the dentist's office. It was very
Right.
cozy, warm, but the excitement and the thrill and the enthusiasm of everybody was so uh, important because I came back month after month and it just became a routine of it. So thanks for taking the time on your busy schedule to speak with us.
You're welcome, and Renee, it's great to connect. I don't know if some people probably don't know me, so I can introduce myself a little
Sure.
bit. And so, I'm Quentin D'Souza. I've been investing in real estate since 2004. I was a teacher before, and I left teaching in 2013 to pursue real estate full time. At the point I had left teaching, I believe I had maybe like 18 properties, and I had been using the BRRRR strategy with partners to be able to grow. And of course, I had my own 100% owned properties.
Mhm.
When I quit, I flipped about a dozen properties, did some rent to own, some wholesales, that sort of thing, and found that I was working harder than I was when I was teaching. So kind of
Yeah.
figured that I should do something else. 2015, I focused on small apartment buildings, and since then I've grown. I've have about 580 units across Ontario. I have a portfolio in Tampa, Florida. And I'm, written 6 books on
That's
Amazon.
amazing.
And
Yes.
yeah, I run the Durham Real Estate Investor Club because I didn't have a network myself. So I had to create my own network where I was. And that's the reason behind the Durham REI. And yeah, just continue to learn and grow. I would say that I'm an avid learner as much as I am, somebody who likes to educate people around real estate investing.
It's a great group. It's a really good group of like-minded individuals. There's always nuggets of information there. For those beginning, it was like a fountain of knowledge for those who are starting off. So it's a really good group. Congratulations on that group. Just one question, just so when you started off, what was the motivating factor? And then now that you've been at it for, you've grown to the size, it's quite impressive. What is the motivating factor now? Like, what did it start off with, and what is it now?
Well, when I started, it was more of an experimentation. I tried a lot of different things. Like I used to run this website called Free Stuff for Canadian Teachers. And I would I had a huge email list, like 20,000 teachers across Canada on this email list. And it was like, I learning how to do things. And then I realized that giving away free stuff doesn't make you any money and it causes you to use a lot of time. So I ended up selling that off and just kind of doing different things. I investigated stocks, I looked at, the Smith maneuver and
Mm,
and then finally I got into real estate and I found that it was the motivation was really to make sure that my family was okay, that we had more money than what we were getting in our paycheck. Because I always felt
mm.
that um, I was by having just one stream of income that I would always be kind of stuck, I guess you could say, because if something were to ever happen to that stream of income, then I would have to replace it really quickly. Or if I had other streams of income, then that would mean that we would have some financial independence. Really, I was hoping just to be able to go on extra vacations with my wife and my kids and that sort of thing. And then as I started to grow, I realized that the returns that I was making in my real estate portfolio actually had dwarf the income that I was making from
Yeah.
my job. And so I had to make a decision in 2013. I had my master's of ed. Did my first year of principal qualification. I was at the board office, so they were kind of coaching me to get into administration,
Mhm.
and I just decided to leave. And
And when you made that leap, what was your mindset at the time when making that leap? What were your thoughts?
Well, it was pretty scary. I mean, like I had the year before I had left, I had talked to my wife about it, and we had agreed to bank my paycheck and use the income from the real estate portfolio to test whether, I would be able to do it or not.
Hmm.
And so that's what we did for 1 year, and it seemed to work out okay. So then I left, and then I like my first property that I flipped in like July of 2013, I made more money than my whole year of teaching. And so I was like, I should have done this before, but whatever.
It was a no-brainer.
Yeah. So I mean, you live and learn, right? But
Yeah, for
yeah,
sure.
it was like my kids were really young at the time too. So they were like, they would have been, let's see, 10 years ago or 11 years ago, they would have been like 8 and 5, right?
Yeah.
So that was also like kind of scary because we're taking a bit of a risk
They're
with
depending
that.
on you. For
Yeah,
sure, they're depending
absolutely.
on you.
I mean, I understand like the modern view of everything, but like I feel like I need to make sure that my family's okay, and I want to make sure that we have the money, and I felt like it was my responsibility to ensure that would happen.
Mhm.
And that was kind of the motivation, and then just kind of
What's the
scaled from
motivating
there.
factor now? Now after,
So the motivating factor now is I have to say is that I've kind of expanded my family. Like I really,
Mm.
like that my joint venture partners are people that I want to ensure that I get them the returns that I think that they deserve, and I deserve too. Like it's a mutually beneficial relationship, but really I want like that's kind of where I'm at with that. Could like not do anything else and be fine? Absolutely. Like I have a quite a large portfolio, so it's not that I have to continue to grow. It really is about managing what we have and trying to be as successful as possible because
Mhm.
it's a very challenging business no matter what people want to tell you on social media and online and all of that stuff. There are some real challenges, like I've got one building that's a pain in the butt, like, and I'm
Yeah.
doing everything I can to try to but it's the thing is it's one building out of a whole portfolio, right? And you can't forget that, but it reminds me every day that like this is not easy, because if it were, everybody would do it, and and
Precisely.
and you can see that like exactly what's happening now. Like people are leaving, like they're going to the States, they're going to
They're
Alberta because
quitting. Yeah.
yeah, they think that the grass is greener on the other side, and and,
Yeah.
and maybe it would be a little bit easier, but at the same time, you still have different challenges that you're going to have to face, and those people that can face the greatest challenges are the ones that are going to be able to succeed the best or the most or go the furthest, and I think that's the challenge, right? And
Yeah, I find everything we do will have challenges and it will make us stronger in the end. And it's those who don't, I mean, the idea that real estate investing is passive. I mean, it can be passive if you're in the right position and the right responsibility and the right role. But
Mhm.
overall, it's a challenge. There's obstacles, there's failures, and few people actually talk about the failures. I mean, is there one you'd like to share with something that you learned heavily in the beginning and then you never go
Yeah.
back and do that again? I mean, there's always failures and challenges with success.
Yeah, like I don't know if it was. I don't like really to call them failures. I like to call them learning.
Oh, good point. Good
Right.
point. Yes.
So yeah. So like I have lots of learnings.
We
I
all
don't,
do. We all
you
do.
know
We
what,
love
like
learning.
I can't tell you how many like I've had. So like, I
I'm
mean,
either making money or I'm learning lessons. That's
or
the
learning
way.
less. Yeah. So I mean, at the beginning, not partnering with the people that have the same mindset as me, like good people,
Yeah.
but
Yeah.
right, like basically, they were house flippers, and I am not a house flipper, and I want to hold on to the asset, and they, as
Mhm.
soon as like something happened, they wanted to sell. But in this case, this person became a really good friend of mine because, he needed the funds for something else, right?
Yeah.
And, I had to come up with 25 grand out of my own pocket to pay out my partner and then continue to own the asset. And it wasn't that it like 25 grand at the time, like this was back in, I don't know, like 2012 or 11 or something
Mhm.
like that. Like at the time, it seemed like a lot, right? But in the grand scheme of things, it's not, right? It isn't because, that person is still a really good friend now. And you go through journeys, right? And it's better to go on journeys with people than by yourself. So,
Well put.
um,
Well put. Very well
yeah,
put. Yes. Yes.
and yeah, I've got lots of learnings. Do we have enough time? We probably need like 20
Yeah,
podcasts for that.
we
But
got we got another yeah, it's only 40 minutes, So the one thing I did learn recently, and it was mentioned occasionally at the Durham REI, was that there's some good deals, but good deals with bad financing equals bad deal.
yeah,
And so it's so important to have the right financing in place because it could turn a great deal into something mediocre, even something that's horrible. So
yep,
those were the
yep,
lessons I learned along the way. So I've got to,
yeah, yeah. I
get the
think
right financing in place.
Yeah, I think people mistaken real estate as a game of bricks and mortar. It really is a game of financing, right? And
Mm-hmm.
the bricks and mortar are kind of in between, but it is about financing because you're not buying things for cash. Like you're buying things with financing in place. And some of the financing that we're getting, is like a real challenge. Like I'll give you like I don't think people tend to understand this who are outside of the space, and they don't understand, oh, you buy a building and you make money and the financing is cheap. Yeah, well, that only depends on like when you're getting it, right? And what's happening at the time. So I'll give you an example.
Sure.
CMHC
Hmm.
doesn't lock in your financing until 3 or 4 days before you
Yeah.
actually close on the
Yeah.
property or refinance the property. So, for example, in 2022, it was taking CMAC, 10 to 12 months to close on financing. Well, you could have got, you could have started at, 3% and it ended
Hmm.
up at 5.5% at the end of
Huge
that
difference.
period.
Huge
Huge
difference.
difference.
Yes.
But the thing is, you're committed. You've got, hundreds of $1,000s into the deal. You got to close on that. But now you've closed on it with not the same sort of financing as what you
Yeah.
started. And it makes the deals almost, you untenable. And, but this is the reality of the financing regime when you only have one real insurance provider in all of Canada. There's no competition.
Mm.
They've eliminated CMHC has not allowed additional competition into the multifamily market for financing. Canada Guarantee, there are other residential insurance providers in Canada, but they have not allowed them in the multifamily space. Not because they don't
So,
want to,
yeah.
it's because they haven't allowed them. Because this is a monopoly for them, this is a cash cow for
Mm.
and it allows them to do something that they weren't intended to do. The CMHC is an insurance provider. Now they've become an arm of the government, a political arm of the government who implements policy. Very different than what it has intended to start out to do. And I think that's affecting the value of it, as well as, it's creating additional levels of bureaucracy within the system that is actually causing us to not really, I don't know, encourage people to get into real estate because of the type of, risk that's associated with this. CMHC can next year decide, oh, well, you had a VTB, now you're not going to get financing. Well, why is
Yeah.
that? You know,
Yeah.
because they decided to, because they think that that's okay. No, it's a political, game that's going on here, and eventually it affects everyone, including the not only the investors, but also it means a limit of choice of the people who are renting properties, because there will be less available properties for rent, less options for them.
So currently, as a multifamily expert as you are you seeing CMHC, their policies at the moment, advantageous for us or a disadvantage at the moment?
Well, you always have to look at the opportunity and the obstacle. I think that there are many obstacles in front of us today for investors. I think that, if you want to speak to CMHC directly, I think you have to understand the system. CMHC is not in the policy of making, investors money. That's not their
Yeah, yeah.
policy,
I
right?
think that's well put.
Yeah. So I mean, their policy is to, is to ensure the mortgages and the housing providers in Canada. That's what
But if their intent is to provide more housing for Canadians, I mean, have they succeeded at this? It seems like they've done the opposite. It seems like we're in a housing crisis because
yes.
their implication.
Yeah, I would agree with that. Um, I think so I have a little different perspective than most because I have assets in the US and I understand the type of financing that they have down
Mhm.
there. We actually have really amazing financing when it comes to multifamily apartment buildings because of CMHC.
Okay, good.
So we actually do, compared to what we see in the US. I mean, you see 25-year amortization, you see interest only, like you see a variety of
Hmm.
products, but you don't see the rates that you see with CMHC and the amortizations amount. Like you don't see 50-year amortizations in the US,
In the
right?
States, okay.
You can get an MLI Select mortgage and then end up with a 50-year amortization if you can, get the point value up, right? And you can get a debt coverage ratio of 1.1, which you probably won't even see in the US on the mortgages down there. So we don't have as many, but we have good value products. The problem
Hmm.
is that we have a monopoly, which is CMHC. And that monopoly, whether you call it a monopoly or not, but it is a monopoly, and it's affecting the choice. So that people can go to, at least in the residential. The other challenge is it's not a huge market, right? We don't have a ton of multifamily product across Canada. It's just not as much as the US because we don't have the population. So they have the ability to push their like the monopoly more and more, right? So
So for those who are looking to invest in real estate, specifically multiplex family buildings, what would you suggest they do? They work with CMHC or not work with CMHC? What's your perspective on that?
well, I think that they should. What I would suggest, it just depends on what your goal is when it comes to the purchase. A lot of people in the last few years have been promoting like through courses and different uh, YouTube and all this, like BRRRR apartment buildings, buy it, pull all your capital out in a year,
Yeah,
take over leverage by, using promissory notes. So you're 110% financed and then refinance in order to get everything out in a year and a half, 2 years. That's great. That's good to sell courses. And
hmm,
if that's what your goal is, good luck to you. I think that there's going to be some challenges with that, especially if interest rates go up, like we've seen, or don't come down as fast as we would
yeah.
hope, or you're not able to turn over the units as as well as you think you were able to do. Like all of those things are going to affect that. So, I mean, it depends on what your goal is. If your goal is to, create long-term wealth, create cash flow for yourself, and you're thinking in decades, not like 1 or 2 years, then definitely I think multifamily has a place, for you. Particularly, I've met a lot of different investors, landlords, whatever you want to call them, that have one building that they've owned for 20 or 30 years,
Hmm.
right? And they're fine. Like when they
It changed
sell
their
their
life.
house, yeah, like I've bought from those people, right? And
Mhm.
they've sold me their asset, right? I paid whatever it was, let's say 2 million or 3 million. They probably had like $500,000 left of debt on it, something like that. Not
Yeah.
a lot compared to what the actual asset was worth. They took those funds, and that's what they retired on, because they didn't have a retirement. They didn't have a pension like like all these government workers who, don't pay capital gains because they have a pension. And then the government changes capital gains because it doesn't affect, the people who have pensions. Well, the rest of the population, it does.
Yeah,
So,
yeah, it
and
does.
and you can't, and by the way, you can't call, 0.13 of the population who gets affected by capital gains according to the government,
How do they get those
statistics.
calculations?
Yeah,
That's
that's the
yeah,
biggest BS I've
yeah.
ever heard in my life. That's this reminds me of, I don't know if anybody remembers the house hippo, of like the Concerned Children's Advertiser had the house hippo, like make sure you understand like what you're watching and you're looking at isn't real. Well, that's exactly what that government policy, their budget announcement was when they said
Yeah.
0.13%. Yeah, maybe in one day a year, or maybe in a year, but over time everybody's going to be affected by capital gains. You sell a cottage, you inherit funds, you get something from a family member, you sell a business, you like all of these things are different for different people. And 0.13 is like, I mean, I we should go back and have them have to refer, like go get,
Back up that number with your calculations. Like, where did
yeah,
they come up with? It
let's
doesn't make any
tell
sense.
me where you got that from, because
Yeah.
that's BS. Like I've never, I mean, it's kind of like fake news, and the government is the one that's issuing it, and then they'll penalize anybody else who does fake news, except you know they can do it.
So I agree with what you're saying. I mean, I always believed taxes was a way tax incentive was a way of creating businesses and all that. With this new budget, it seems as if they're really not encouraging the entrepreneur, the real estate investor, to go out and buy more, create more housing. How do you see it moving forward the next 5 years or so? I mean, really, right now we're at a disadvantage. I'm talking to people going, why should I even sell anything? Because I'm going to get taxed even more. More people are looking in the States, and the numbers seem to make sense. So how do you see it moving forward?
I would tell all of those people, you should go to the States, you should go to wherever you want, you should leave and leave the properties for me so that I can,
So, yeah,
so
I
that
mean,
my
well,
rents continue to go up. And like, no, you're right. Like what is happening is that we are discouraging investment in our
yeah,
country. We're discouraging investment in our province. This happens in a number of different ways. The patheticness of the bureaucracy of the landlord tenant board in Ontario, the tax regime that we are seeing, carbon tax on top of
hmm.
tax. All of these things discourage investment in our country.
It seems
And
as if they're making the mistakes and we're paying for them.
yeah, and on top of that, we're providing them with the income for,
Oh,
to make more mistakes, right?
yeah.
Because they're increasing taxes to do it. Now, like where do I see us in 5 years from now? I mean, I like crystal ball wise, I think that if we do see interest rates come down, and in a significant way, I'm talking like 1 or 2 or 2%. Let's say
Hmm, hmm.
2%. Okay, I do think that we will see residential properties, so residential real estate, back to prices back in 2022 and probably higher going forward.
Yeah. Yeah.
And I could see that too in the residential, like commercial space, multifamily. I could see cap rates compressing again, maybe by a 1/4% or a 0.5%, because cap rates are really based on three things, right? It's like the location of the building, the quality of the building, and interest rates. They all affect the cap rate. So I think that will effectively compress the cap rate. From a governmental perspective, if the current government was to come in for another 4 years, I think we would have more capital flight outside of Canada. I could see
Yes.
more professionals leave Canada, like from a brain
Exactly.
drain perspective. I could see, like right now, I feel like I am a bad person because I'm an investor in Canada. Like I invest in like by buying I'm doing the best I can to provide good, safe, healthy rental properties to people. And because of that, I am a bad person.
Yeah.
And the government is telling me so because of how they're treating me as an investor. The taxes, the carbon tax, all of these other things, trying to, on one hand they say, oh yes, we were going to increase the zoning, and that's what's going to help the number, and then we're going to take it away with the other hand. Well, I'm sorry, but it doesn't
They're
work
trying
that
to
way.
help out. We're trying to solve this housing crisis at the moment. The government's going to do it. They're not going to do it, and then we're
No.
penalized.
Yes. And they can't do it because, so I don't think some people understand this from a municipal
Yeah.
level, how much of the municipal tax base comes from some of the construction that's going on in different areas, right? So I'll give you a good example. In Clarington, your development fees and stuff like that for a single family home a couple of years ago would have been $40,000. Okay.
Mm-hmm.
So $40,000, to develop a single family home. I mean, okay, so that gets added on to the cost, right? So that same single family home lot today, the development fees are $120,000
Oof.
from just like 2 years ago.
What does that
So
cover?
So no improvement in the number of services that are offered, no improvement in the streamlining of the process, no improvement in any of the quality of services, but $120,000. So what is happening is development is supplementing the tax base, and there's no reason for them to develop their own housing or affordable housing because of the amount of money that comes from those development fees. Because if they're developing themselves, they're not going to charge themselves development fees. They're not going to get those fees from each of the units that are being created. It's a disincentive actually to create the affordable housing on the municipal level, right? Because we have three levels of government, and what the federal government doesn't mean the provincial or municipal want to follow, right? So the federal government says we should have fourplexes on single family lots. Well, the municipal and the provincial government say, I don't think so.
Yeah,
Right?
exactly. This is what we're encountering this at the moment in Kingston, where a lot of people, especially the residents on certain roads, are saying, "What do you 4 units per lot? That's crazy. We don't want that in our neighborhood,"
Yeah,
and they're pushing against it. And
yeah,
some of them are winning. A
yeah.
lot of them aren't. But it's interesting exactly what you're saying. They do not talk to each other, and they don't agree with each other. These governments.
No, and the development process is also a problem. So if you're thinking about this from like a 5-year provincial type of
Yep.
perspective, like a government comes in and says, we want more housing. Okay, so we're going to develop these laws that allow you to increase zoning and do all this stuff in order to build more housing. So what about the actual development cycle? So what happens, for example, in Edmonton, if you wanted to do an infill lot and you want to put 8 new units where there was 2 houses before, and you have the parking and it makes sense, you could probably get that development done in 12 months, 12 to 18 months from
Mhm.
idea to completion, finish build. Okay.
12 to 16 months or
12
18
to
months.
60, 12 to 18 months. Okay. And this is from like developer friends who do this. Okay. You have the same, let's say you wanted to do the same thing in Toronto, for example. It could be 3 to 5 years just to get the approvals to get that done. Okay.
Wow.
You're looking at that in smaller area. Like I'm trying to build units in Trenton, which is a smaller area. It's taken us almost 2 years just to get approvals. Like these ideas of densification are great, but the reality is that this just isn't happening. Like I've had story after story after story from people who are trying to put 20 units in who get pushback from
Yeah.
wherever they are, and then all of a sudden they are down to 4 units or 6 units, and it doesn't make sense anymore,
Mhm.
right? Like the build doesn't make sense. It's just not. It's just not happening, and I don't see it happening anytime sooner in provinces like Ontario, where the amount of bureaucracy is ridiculous. I remember seeing something on Twitter with all like the codes, and from what it was 10 years ago, I think it was 10 years ago, to what it is today. The code,
Mhm.
actually, the book itself had doubled in size, right?
Really?
Doubled in size. So what you're saying is, you're going to build, but you're going to build with a lot more bureaucracy, a lot more rules, a lot more. Well, it's just not going to happen in a timely
Yeah.
manner. So, and I
Do
don't
you
see
see
us
this
being
housing
able to
crisis
do that.
going away anytime soon?
No, I
No.
see it
Yeah.
getting worse. I see the single family home disappearing from reality from most people because we're not building them at all, like
Yeah. New
anywhere.
construction stopped building
No,
last
no,
year. It didn't make any sense financially.
no, it doesn't. And I know that, and I know of building organizations in the area that I'm in, and I'm not going to name who they are,
Mhm.
who basically said, we are not building any more single family homes until you pay us to build them.
Mm.
And that really says something. And I think that single family homes are going to be extremely valuable in the coming, years. Maybe not this year, maybe not next year, but in the coming years, I think that these will be extremely valuable because it's just not going to be there. It's just not going to make sense to build. And really, it comes down to, and I hate to point the finger at anybody. I
Mhm.
would say it has to do with municipal government. The municipal governments are truly the problem. And nobody is going to be able to fix that because of the way that the government processes work. It's not. And, you know, this is how I see it. I'm not,
Yeah, 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 yeah.
I'm
I
not
love
the,
your perspective on things. I love your perspective.
but I just want to call
Yeah,
people out who are responsible, and
yeah,
and they'll blame it, like mayors in Toronto. You're pointing at councillors, pointing at other people who are the problem. It's the buck stops with the mayor, and the buck stops in with the council. You're
yeah.
making the decisions municipally, so take responsibility for it. It's your fault if
Are
something's
there
not
some
happening.
municipalities that are friendlier than others?
Yes. Oh, absolutely.
Like
And
which
that's where
one?
people are building. So, so if you're looking at, so for example, Pickering right now will allow fourplexes in single family zoning,
Nice,
right?
nice.
I'm starting to hear that other municipalities in Durham, and I don't want to say who they are.
I've heard Bowmanville was very
So
was very favorable as
no,
well.
they're
No?
still sticking with triplexes right now.
Oh, okay, okay,
They're
okay.
not going to fourplexes.
Yeah.
They're allowing the three. But like other municipalities within the Durham region are, I'm hearing from from behind that they're allowing fourplexes as long as you meet the criteria. So So I'm
In
here.
Kingston, they're writing the rules at the moment, and then we'll
Right.
figure it out. It'll work either in our favor or against us. Hopefully, we'll know by June if they're gonna allow 4 units per lot, 12 bedrooms per lot as well.
Yeah, so I mean, I think that that there's some important changes that are happening, but the process still takes too long.
Yeah.
Like if even if you have that, the good thing about it is that like before what was happening was that some person, and I did a zoning change recently for a duplex where I'm trying to build a semi and
Hmm.
add multiple units on each side. You know, I like somebody from 5 streets away who walked by the street complained about a tree coming that it
Oh,
was going to come down because
yeah,
it was needed in order to do this. Well, I appreciate that, but you don't even live in the area. Like I mean, you live in the general area, but you don't live on the street. Like, why do you have a right to say anything? I'm sorry, but like,
yeah,
this is why we have problems with, development, because you have these oddities and you had groups of, people that do this, right? And it just doesn't make sense. Like, if you're really trying to build houses, then build houses,
yeah,
right?
yeah. Simple as that. Just build houses. It seems so simple. So what do you suggest to people just starting off? Like, obviously, there are problems now. They may get resolved. There's challenges along the way, but how do we encourage people who are looking into getting into real estate investing? What do you suggest? 3 to 5 things. What do you tell them?
Well, first, you still want to find cash flow. Like, I'm
Yeah,
sorry, like buying a property with negative cash flows is not a good idea. You need
that's
to
not
be
good.
able to hold on to that asset through interest rate cycles, through problems with the landlord tenant board, through all of those things. So when you're buying property, whether it's a 1 to 4 unit property, you buy a single family, convert it to a duplex, add a garden suite, whatever it is that you're going to do to it to increase the density and make it cash flow, do it, and then hold on to that asset and think about it as something that you're going to hold on to for 10 years, right?
Mhm.
Number two,
Yes.
never let a government or a tenant force you to sell a property. Okay, never
Good
be in
one.
a position where that is what's happening because of the numbers that you have with a particular property. Never be put in that position because um, it's easy enough to do. Unfortunately, if it takes 8 to 12 months to evict somebody and you have one property and you're depending on the income that comes from that, and if you don't,
Hmm.
you're going to go bankrupt because of it. Don't buy that property because
Yeah.
it's going to put you in a bad position overall, and that's not something that you can do. The third thing I would say is surround yourself with other people who have already done what you want to do. The best thing you can do is be with people who have already done what you're looking to do, because they'll already have solved the issues that you're trying to solve. They're already going to be able to help you through different problems that you have, give you the best advice because they've already done it. It is so hard for people to figure out who are the real experts when you look at social media, because
Hmm.
everybody thinks that everybody else is an expert because they're showing the property that they
Yeah.
purchased. Meanwhile, it's the only property that they own, and they've done one duplex conversion, and
Yeah.
they're an
I
expert at
encounter a
whatever
few
it is
people
they
like that
do.
all the time.
Yeah, and,
It,
and,
it
and the
baffles me. It just
yeah,
makes me laugh in a way. They're
oh, for
experts. They
sure.
bought 1 or 2 properties. They know everything.
Yeah,
It's just,
short-term rental experts because they own one short-term rental or two short, like it's just bad. So because that's the person who is gonna go under in a year or two, and
yeah,
they're
you
gonna
got to be
take
careful. They'll
everybody else
endanger
who
people. They're
listened to them as
dangerous for
well.
you.
They're
Yeah.
dangerous. Yeah.
Well,
So
yeah, number. So I got a few more.
no, those are three. Those are
Three. Those
three,
are the
right?
three. So
Yeah.
so I'd like to end this interview. So with one question. You're going to Mount Everest.
Yes.
and and you went to Kilimanjaro, and I know
Yes.
actually a good friend of mine went to Kilimanjaro with you,
Yeah.
and he tells me the one thing that was so important was the support.
Yes. Absolutely. Like, so I've done some interesting hikes. I'm heading to Everest Base Camp where I'm going to be away for 21 days. I've got to have my team has to kind of work behind me, doing maintaining the portfolio, solving
Yep.
problems, all of that. So I have that type of support. Doing the climb, like I mean, I have my gym buddies that have helped me to make sure that I'm going to the gym 4 or 5 times a week. I do 5K in the morning when I get up. I'll
Awesome.
sometimes after I go to the gym, I'll still do another maybe 3 or 4K walk in the afternoon just to make sure that I get my steps in. I'm doing like 15,000 to 20,000 steps a day. On the weekend, I'm going hiking for 10 kilometers. Like, and I have people around me who are supporting me to do that. When I get to Everest, I will have a team of people that help me to be able to keep myself in the right mindset, be positive about like
Mhm.
walking, helping me if something hurts or there's a problem, altitude, food, all of that sort of stuff,
And you're walking for
support.
21 days, pretty much?
So it's actually 14 days.
14 days.
So it's going to be 10 days up, 4 days down.
Mm.
And what ends up happening is that it takes a day and a half to get there because of the flights and all of that.
Yeah.
And then we're going to have a couple days at the beginning and a couple days at the end because what the so the plane ride to get to Everest from Kathmandu to Lukla is called the most dangerous plane in the world. Don't tell my wife that. She's not going to be happy.
Is this just
So
a propeller?
so
Like,
so it's a small plane, holds 15 people, and it basically
okay.
like you're on the edge of a mountain, and the runway it ends. And then you're off the side of the mountain, and then you go off like that, right?
So you
So you're
drop.
so
Before
you
you take
drop
off,
and
you
then you
just
go, yeah.
drop.
So it's called the most dangerous uh, flight in the world or
Sounds like
airport.
most businesses. You take off, you drop, and then get back up.
Well, that's exactly it. So one of the things that I do for myself is I do a quarterly plan, and I have like something that takes me out of my comfort zone every quarter. I've been doing that for since like I think 2013. And this quarter, it's this Everest Base Camp trek, right? So,
Big one.
everybody's got to, if you're going to take away one thing from this talk, you know, do something this quarter that makes you uncomfortable, makes your stomach kind of churn, but you do it anyways because that is going to help you to grow. Because all of a sudden you're going to be like, man, I did this and now I can do something else.
Yes.
Now I
Yes.
can build on
Yes.
that and do
Yes.
something else. So everybody here who's listening, go put something down on paper, put it on your fridge,